Good day and welcome to the Genus Power Infrastructures Limited Q2FY24 earnings conference call. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on date of this call. These statements are not a guarantee of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Today on the call we have Mr. Kailash Agarwal, Vice Chairman of Genus Power Infrastructure Limited, Mr. Jitendra Agarwal, Joint Managing Director of Genus Power Infrastructures Limited. I now hand the conference over to Mr. Kailash Agarwal, Vice Chairman of Genus Power Infrastructures Limited. Thank you, and over to you, sir.
Thank you. Good evening, ladies and gentlemen. A very warm welcome to Q2FY24 earnings calls of Genus Power Infrastructures Limited. Along with me on this call is Mr. Jitendra Agarwal, who is the Managing Director of the company, and SJ, our Investor Relations Advisors. The results and investor presentation are uploaded on the stock exchange and company website also. I hope everybody had a chance to look at it. Let me begin by first wishing everyone a very happy Dhanteras, a very happy Diwali, and a very happy, prosperous New Year. Since July 2023, our company has showcased an exemplary track record in terms of order inflow, successfully procuring a series of 6 notable orders. The aforementioned orders, which carry significant value of approximately 15,160 crores net of taxes, are related to the procurement and installation of about 1.72 crores smart prepaid meters. The present aggregate order book of our company stands in excess of 19,000 crores net of taxes, thereby reflecting a highly positive outlook for revenue growth in the forthcoming quarters. However, it is important to note that the execution of these orders will commence only after a time frame of approximately 6 to 7 months from the date of order receipt. A significant amount of time is required to complete various essential formalities like regulatory approvals, contractual negotiations, and logistical arrangements. Our team is dedicated to meticulously addressing every aspect of the execution process to ensure a seamless and successful execution process. The execution cycle of the current order book is about 27 months. Thus, it provides healthy visibility for our top line growth for next at least 3 years. Many state electricity boards have initiated the process of inviting proposals for the deployment of smart meters, demonstrating the positive effects of the reform-based result-linked power distribution sector scheme. We expect a robust order flow to continue through the remainder of this fiscal year. Our strategic partnership with GIC marks a crucial milestone in our journey, bringing together the expertise and resources of both entities to drive innovation, sustainability and efficiency. The formidable presence and robust financial position of GIC, combined with our proven track record in delivering cutting-edge meter solutions, create a powerful synergy that will propel us to new heights. The company has also signed a commitment letter with the United States International Development Finance Corporation to obtain a loan of $49.5 million to scale up the deployment of electric smart meters across India. Our working capital cycle is expected to improve going forward as payment terms are better, and going forward most of the business will come through either the platform or AMISP. Coming to the quarterly results, the sales of Q2FY24 stood at rupees 259 crore, up by 18.4% as against Q2FY23 revenue of 219 crores. For Q2FY24, EBITDA stood at 25 crores, up by 46% as compared to 17 crores in Q2FY23. The company has experienced a notable uptick in employees' expenses and other expenses. This can be attributed to the ongoing expansion of our workforce and the implementation of system management. These strategic initiatives are being undertaken in anticipation of effectively executing the significant order book that has been successfully secured. Profit after tax stood at 11 crores for Q2 FY24 as compared to 10 crores Q2 FY23. The company's profitability for the Q2 FY24 was affected by a notable surge in finance expenses. This was primarily due to the obligation to furnish first-rate bank guarantees in order to secure substantial influx of orders. Based on our analysis, we anticipate a notable resurgence in revenue commencing in Q4 FY24, propelled by the strength of our order book and consistent stream of new orders. We expect to record total revenue of about 1,200 crores in FY24. The Indian metering industry will see strong order inflows, healthy top-line growth, higher operating margins, and an improved working capital cycle going forward. We maintain a positive outlook regarding the substantial enhancement of our business operations starting from the fiscal year 25 and beyond. Now our request for question and answers, please.
Thank you very much. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take our first question from the line of Mohit Kumar from ICICI Securities. Please go ahead, sir.
Yes. Good evening, sir, and thanks for the opportunity. So my first question is on your L1 position. Is it possible to tell us how the L1 position, also the tender pipeline?
Hi, good evening, Mohit. The L1 position is now mostly all the tenders where we were decided. Very few are remaining which are not yet decided and which we feel should be decided in the next. And regarding the pipeline, primarily there are 2 large tenders which are to be quoted in the next couple of months and few where the evaluation are going on. So the pipeline is also robust in terms of numbers. Almost 25 million meters are either quoted or to be quoted in next couple of months.
Understood, sir. So my second question is, what is the status of platform with GIC, and have we entered into any pricing arrangement in the transfer pricing arrangement with the platform?
Yeah, that was definitely part of our JVA with them, and that has already been done.
Okay, it's already done. So my last question is on the order book. So when you say the order book, this order book is the total summation of the 90 or 120 months of revenues. Is that right? This is not the order book which is available to Genus, right? Because this is the order book which is available to the platform, not to the Genus. Is it possible to segregate the amount which is available to Genus? Is it possible?
So basically, we can say like that this is the total order book. You are absolutely right. And out of this, almost 70% will be available to the Genus.
Understood, sir. So in a way, we can say that out of 18,000, 20% or 12,000 is available to Genus.
So basically, total order book is around 19,500. Of that, 70% will be available to Genus. Yeah.
Understood. Thank you, sir. Thank you for answering the question, sir. Best of luck, sir. Best of luck.
It will be more than 70% because this 19,500 includes some orders which are only for Genus, only around 50.
Yeah. So basically, we are talking about the platform, JK, that out of platform, what will be available to us.
Understood, sir. Happy Diwali.
19,500 includes the orders which are only for Genus.
Yeah.
These include the export orders also.
Yeah. Understood, sir. Happy Diwali to you, sir. Thank you.
Thank you. Happy Diwali.
Thank you, sir. Before we take the next question, a reminder to all the participants, if you wish to join the question queue, you may press star and 1. The next question is from the line of Milind Karmarkar from Dalal and Broacha. Please go ahead, sir.
Hi. Thank you for the opportunity. One of my questions was what the previous was answered previously. My second question is basically I just wanted to understand if I look at say 3,000 rupees per meter, that means roughly out of the total order about 3,500 crores will be for the production of meters, and the balance will be for the installation and maintenance. So out of this maintenance, would it be the maintenance part which will go to the joint venture and the realization of that will be over a period of time, or how does it work? Could you please explain?
Sir, you are doing it, or can you repeat the question, please?
Okay. So if I divide the order into three parts, one is the production, second or supply of meters, second is the installation, and third is the maintenance. So the production, of course, will entirely come to Genus, which probably at 3,000 rupees per meter will be of the current order book will be about 3,500 crores. And then we have the installation, which probably also will be done by Genus, which will be maybe another 4,000-5,000 crores. And then the balance, which will be maintenance, which will be spread over a period, that will go to the joint venture. Am I correct in assuming this?
No. Even the maintenance will also come to Genus, but that will be on the annuity basis.
Correct. So what is the portion which goes to or which is funded by the joint venture?
So the total will be funded by joint venture only. Even the meters, installation, but the whole work will be done by Genus. The meter supply, the installation, and the maintenance also.
Correct. But what I'm trying to sort of gather is that the maintenance turnover out of the current order book will be spread over a period of 7-8 years. Am I right?
Correct.
So production revenues will come immediately, installation revenues will come post that, and the maintenance revenues will be spread over a period of 6, 7 or whatever the period is.
Absolutely, yes.
Okay, all right. Thank you.
Thank you. A reminder to all the participants, if you wish to join the question queue, you may press star and 1 on your touchtone telephone. The next question is from the line of Nikhil Abhyankar from ICICI Securities. Please go ahead, sir.
Thank you, sir. Thanks for the opportunity. So, are we having any problems in sourcing of certain key components like relays for the smart meter production?
Currently, we are not finding any difficulty.
We are not having any. And so also, other players are also winning smart meter orders. So, and we were expected to order from us as well. So have you already started receiving queries and have you already started booking orders from them?
Yes, we are receiving inquiries from all the AMISP players. We are also booking the orders through them.
Sorry, sir, I did not get that.
So we are already getting inquiries from all the AMISP providers, people who have won the order, and we are working closely with them. A few orders have been closed and few will get closed over the period of time.
Okay, few are already closed. So are they also included in this 19,000 order book?
Yes, they are included in this.
Okay. And so again, back to the production. So of the smart meter, what do we exactly produce in-house and what all things do we outsource?
So all the key components are outsourced. Like any typical manufacturing, we don't manufacture semiconductors. And most of the things we do in-house, all SMT lining, assembly of the product, molding, tools are all done in-house.
Okay. And so just a final question. We have already gotten an order of 19,000 crores and during the SPV was formed, you mentioned that the target would be somewhere around 30,000 crores of orders. So are we capable of taking in orders beyond that? And so just want to understand about that?
So we are well above our target, what we decided in the SPV. So we are very well within the target and within the
Absolutely, we are open to take more orders. It depends how it works and how the thing moves. We had a target of 30,000 crores in 3 years' time. So already we have reached that 2/3 level within 6 months or 7 months' time. So once it happens, we will see in future how it works and how it goes.
And so just to follow up on that, if we get orders beyond 30,000, will our equity requirement investment in the SPV will also go up?
It may go up. It may go up.
But
there will be accruals also. It won't go up by a very big number.
Okay, sir. Thank you and wish you a very happy day.
Thanks.
Thank you.
Thank you. A reminder to all the participants, to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Mr. Manan Poladia from MKP Securities. Please go ahead, sir.
Hello. Hi, sir. Am I audible?
Yeah.
Okay. First of all, sir, congratulations on posting a good set of numbers. So what I wanted to understand was, first on the margin front, see, historically, from what I can see, in the recent past, we may not have done it, but say March 21, etc., we used to do about 15-17% type operating margins as well. And in the recent past, we've only done about 10-11%. Is there some specific sort of margin pressure with respect to component prices or something or the other that is restraining us from doing higher margins, or do we see that coming into force with operating leverage going forward?
So here you will see that if you even compare from June quarter to September quarter, you will see that margins are almost same, but the expenses, other expenses, the finance expenses, the employee expenses, everything has increased, and it has increased by almost 4 to 5% from June to September quarter. So that once the revenue will grow, these all expenses have grown because of the preparation that is happening to execute all the orders. So basically, employment, you will see there is a gap of almost 2% there. Other expenses, you will see there is a gap of almost 1.5%. 0.5 to 1% there is a gap in finance cost also. So that will be all covered once the revenue will grow. And this additional thing will directly come to the margins only. So you can calculate that the margin immediately will reach to 15-16% level once even these costs are taken care.
Correct. Right, sir. Thank you. So my second question is on the order book. So like the previous participant also pointed out, you spoke about how the order book is divided into production and maintenance and installation, right? So if you could give a sense of how the 19,000 crore is broken up in these 3 segments, and what would be the implementation timelines for each of the segments?
Can you repeat your question? The timeline for the SPV?
Yes. I'll come again, no worries. So what I'm trying to ask is, sir, out of this 19,000 crore rupee order book, what portion of it would be manufacturing, what portion of it would be installation, and what portion of it would be maintenance, and what would be the timeline that these order books would play out over in terms of manufacturing, installation, and maintenance?
Yes, whole 19,000 is not from. So major is AMI SP orders. So in these 19,000, you can break them in 4 portions. One is the manufacturing and installation, which will be around 50%. Then around 25 to 30% will be your maintenance and FMS for 7 years. And the remaining 20% is the value of is the cost of financing, which will go to the platform. So this is how you will see the revenue of this 19,000 crores.
Correct, sir. Thank you so much.
Thank you, sir. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone phone. We take the next question from the line of Srijan Sinha from Future Generali. Please go ahead.
Hello. Yeah. First of all, let me wish you a very happy Diwali, and I wish a very prosperous year for you ahead. Sir, I had a couple of questions. One, if you could help me with your current capacity, is it 1 crore meter, if I remember correctly?
Yeah, we have always maintained that in the current situation we can manufacture around 10 million meters annually.
Okay. So, sir, in that case, we have already booked orders for, let's say, about 1.75 crore meters, executable over next 30 odd months, right? 2.5 years. Then our requirement basis, our current order book itself is closer to 70-75 lakh meters a year, right? So, in that case, are we open to taking orders from other AMISPs as well? Because then we are crunched for capacity. And how quickly can we increase our capacity to manufacture these meters?
So we are definitely open and we are taking orders from the other AMISPs. So we don't want to be looked in the market areas and not supporting as a meter manufacturer. So we are playing our role as a meter manufacturer absolutely properly. And we have been saying this in the past also, for us to ramp up the capacity from 10 million to 15 million and from 15 to 20 million to 6 months. So as and when we are seeing the requirement, we are going to increase our capacity, and we are definitely capable of supplying to the market and catering the market whenever they require.
Is there any specific capex requirement to increase your capacity?
Not major, but definitely some capex will be required. It is already, we are continuously building our capability, and some capex will be required, but it won't be major.
Okay. And sir, my second question is with respect to this quarter's revenue. What would be the ballpark contribution from the AMISP? In the specific Bihar AMISP that we have been executing?
Most of the revenue is coming from the AMISP projects and from the other old orders which we are executing. In terms of percentage, it's very difficult for me to right now specifically comment, okay, this much of percentage comes from the Bihar.
Okay, the reason why I wanted to understand this was, what is the legacy order book that is left, which is a drag on our margins? And B, what gives us the confidence that we'll be able to achieve 1,200 crore top line this year? Because, bulk of the order flow has happened post-July, and even assuming 6 to 9 months of pre-execution phase, bulk of the revenue should start accruing from next fiscal year itself. So then, because we have only done about 500 odd crores in H1 of FY24, about 700 crore is required in H2. That's a 350 crore quarterly run rate, which at the moment seems quite far-fetched because of the lack of contribution from these new projects, right? Then what is giving you that confidence that 1,200 crore is an achievable number?
The two reasons
Here you have to understand that we have orders before 6 months also, like Bihar, Chhattisgarh and all.
Yeah.
Bihar and Assam.
Assam.
Yes, sir, that's what I wanted to understand. What has been the Bihar's contribution?
There will be a lot of contribution.
Yeah.
There will be a lot of contribution coming from Bihar and Assam projects in next 2 quarters. So that is why we are 100% confident that we will achieve this 1,200 crore mark.
Okay. Sir, what is the legacy order book still pending with us? What would be the size of it?
Around 400-500 crores, and a lot of even conventional meter orders are also coming. It's not that they're completely stopped. We are also getting some, we are doing some export business also. So all these are getting added to the numbers.
Okay. And sir, secondly, my question is on margin. How soon do you think we can revert back to that 15-16% kind of margin trajectory? Is it second half this year itself, or does that spill over into next fiscal year?
So here, basically, as I told to the earlier answer also, that you can see the numbers. The numbers itself reflects that the margin is going to increase, because whatever the expenses that has been increased, that is increased for the execution of this order book only. To get the order, we have given a higher finance cost because of bank guarantees and all. A lot of employees have been recruited, so their salaries also have increased.
So you will see that there is a clear-cut reflection from the June number to the September number that if the revenues increases, like we are talking about 700 crores revenue instead of 500 crores in next half. So that will surely make the margins to go to a level of 13%, 13.5%, and then another jump in the revenue will go up to a level of 15-16%. So once the revenue will be growing, the margins will automatically be growing.
Okay, fair enough, sir.
So you just compare the June numbers quarter and the September numbers quarter. You will see that the margin has increased. But the expenses have also increased. The revenue has not got to a level where they can justify the expenses. Once the revenue will go to that level with a justification to the expenses, the margin will automatically increase.
Fair enough, sir. I mean, looking slightly further ahead, for FY25, what is the kind of top line number that we can potentially look at? Because all these orders should ideally start contributing in FY25, right? And FY25 should be a really big year for us.
Even basically, when we are sitting on an order book of 19,000 crores, and we say that almost 70% will come to Genus, including maintenance and all, and even if we remove maintenance business out of it, which is an annuity business, almost 60% we have to execute in next 3 years. So there will be a substantial big numbers coming in FY25, 26, 27. So right now the projects are under consideration, and we are just evaluating that how much time we will take to start these projects and all. So give us one more quarter so that we can give you the proper numbers or exact numbers for 25 and 26. But there will be a multi-fold increase that we can say. There will be a multi-fold increase that we can say.
Okay. And sir, my final question is, given your current capabilities, given your current capacity, what is the kind of peak order book that you are looking at?
Earlier I also discussed that we made a target of 30,000 crores, and already we are sitting on a 20,000 crores. So let us first reach to that level, and then we will revise our numbers and all, and see that how we can revise that.
Okay, sir. Thanks a lot for this. I'll rejoin the queues.
Thank you.
Thank you. A reminder to all the participants, if you wish to join the question queue, you may press star and 1 on your touchtone telephone. The next question is from the line of Sonia Varnekar from Dalal & Broacha PMS. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, previously you mentioned that if we look at the total order book breakup, manufacturing and installation should be around 50%, and maintenance should be around 30%, and rest 20% goes to the financing. So when you said that execution cycle of the current order book is around 27 months, so does that mean that this manufacturing and installation, which is 50%, is likely to come in your revenues in next 27 months, and the remaining next 30% of the maintenance that comes in 9-10 years, and the remaining 20% goes on the books of the AMISP, that SPV which we have made recently? Is my understanding correct?
Yes, your understanding is correct.
Okay. And so my second question...
A little bit here and there, but yes, mostly it is correct. And the maintenance is not 9-10 years. Total project is 93 months. So this is how we will have to see it.
Okay, sir. Okay. And so my second question is on the orders which we are receiving or we might receive from the other AMISPs. Like for example, Tata Power also got some orders. So when they give their orders to players like us, so do they give the whole package of manufacturing, installation and maintenance and everything, or they just give the manufacturing portion and the installation and maintenance part is done by them? How is the structure generally?
Different clients have different requirements. A lot of them want us to do end-to-end, but we as Genus are we are going to be only a technology provider. This can be meter, this can be software, this can be communication, but yes, we are not going to take their installation services. We have enough in our own company. So for them, for the other AMISP players, we will be a sole technology provider.
So, when you say a technology provider, so from the overall piece, what percentage roughly of that pie would come under that, like 20%, 30% roughly?
That will be around 35-40%. So it will be meter. We can also provide the software with communication, without communication. Depends on the requirement of the client, but mostly meters.
Okay. Thank you, sir. That's it from my side.
Thank you.
Thank you. We take the next question from the line of Mr. Rahul Kothari from Grit Equities. Please go ahead, sir.
Yes, sir. Just to further understand on the selling of meters to other AMISP, I just wanted to understand on a broader note how is company's approach towards it, whether it's more of a considering that there are limited large players in India to manufacturing smart meters, so it's more of an inbound inquiry that we are entertaining, or being large houses participating in AMISP for a long term, we are also marketing smart meters to them to secure product to secure tie-ups with them. And secondly, also please help me understand the competitive landscape when it's about selling only product to other AMISP.
So we have to understand one simple thing. Genus has always been in electronic energy meter, and we continue to do the same. So we are approaching all the AMISP project owners and doing our marketing to sell meters to them. So with that full commitment, it's not that we have become an AMISP and now we are not serious about selling our meters or technology to our customers. So that business what we have been doing in the past and which is going to continue in the future also. So now it's the world of competition also and collaboration also. During tender, sometimes we compete with it, but when it comes to once the tender is decided, once orders have been placed, we work with them as they are our customers and we work very closely with them. And when it comes to competitive landscape, it is like every business has a good competition and meter business has equal competition. What it used to have earlier also, some 3-4 good companies in the country are the major players of these smart meters.
Yes, sir. Thank you for explaining that. Just to understand more on that, considering the flow of orders across the AMISPs, do we foresee that over the period next 1 or 2 years there would be a demand and supply gap, or more on the towards meter manufacturers, almost capacity utilization for us, full capacity for either for our own or.
I feel it will be a full capacity utilization. Demand and supply gap, I don't want to comment right now. Maybe after 12 months, there will be some picture in front of us, but currently I don't see any demand and supply gap.
Okay. And sir, just last one, sir. So what under the current order book that we are having as on now, considering 27 months timeline, it is safe to assume that for this FY23, 24, 25, and 26. Almost all this order has to be installed. The product has to be supplied and installed in the market, right?
Yeah, from the date of agreement, we have to complete these in 27 months. You're mostly correct that by the end of 26, we will have to complete the project.
Okay, sir. That's it from my end. Thank you. Thanks a lot and best of luck.
Thank you, sir. A reminder to all the participants, if you wish to ask a question, you may press star and 1. The next question is from the line of Mr. Narayan Singh from Navaman Securities. Please go ahead.
Hello, sir. Thanks for giving me opportunity. I just have two questions actually. In the smart meter as an OEM, so how many OEMs do we have in India? Because I am talking another company, HPL. So they also say that they have a market share of 20 to 30% or 25%. And from Genus also, I read that 27% of market share. So where is this other approximately 50% of supply coming from? Do we have some other manufacturers in India, or are they imported? So I guess if you can provide these details.
So there is no imported meters in the country. They are all Indian manufacturers. And there are companies like Schneider, Secure Meters, HPL, A1 Meters. There are few good manufacturers who are in the market.
Oh, okay. Thank you, sir. Thank you for the details. I have next question, actually. This is more of your organization long-term vision. So, I mean, if you see that now you are in front of this massive order book, which probably brings a lot of cash flows in the next 2-3 years. So, what is your vision for the company? So what do you want to do with this cash, sir? So I mean, it's too early probably to speak about these things, but just I want to understand, are we just about this only one wave, or you plan to use this cash to maybe build an organization for bigger things in future? It would be really helpful to know from your views, sir.
We definitely are going to build an organization for the very long term. But beyond that, I don't want to make any statement right now.
Okay. Okay, sir. Okay. Thank you very much for that.
Thank you.
Thank you. Good luck. Good luck. Bye.
Thank you.
Thank you, sir. The next question is from the line of Milind Karmarkar from Dalal & Broacha. Please go ahead, sir.
Yeah. So, couple of things. One was about the debt or the money which you plan to raise, I think $40 or $50 million. What will it be? What will be the end use for that?
It will be for the Bihar project we will be doing in the company. That will not be transferred to the platform.
Okay. The second question would be something similar to what the previous participant asked, which was, I know that next 4-5 years the company has got its hands full. Beyond that, just wanted to understand what kind of opportunities do you see in this field of metering process?
Electricity has become the most important thing for the humankind. So with the way the use of electricity is increasing, the future of metering companies or the companies involved in this kind of work is very, very bright. So there will be a lot of opportunities beyond metering also, which will get opened up for people like us in the times to come.
One last question from my side was about these meters. So I'm told that, especially in Maharashtra, what is happening is that the smart meters are being installed and the money is being recovered from the consumer by increasing his or her electricity bill. So there's a charge which comes addition to the normal charge. How is it happening across India? Or each state is different? That is, how much does the consumer have to pay and how much is contributed by the government and the state electricity board? How does it work?
Nothing is to be paid by the consumer. Maybe even in Maharashtra, I'm pretty sure there's nothing to be paid by the consumer. You have some confusion in there. You can further get your data corrected. But as per my understanding, no electricity board or no utility is charging for them. These are only supply fee.
Sorry, sir, your voice is inaudible. Could you please repeat?
Hello, Jitendra sir?
Hello, I can hear.
Basically, there must be some confusion to you. There is nothing like that, even in Maharashtra also. Nothing is being charged by the consumer in any of the states. What we know.
Okay, because I was reading the newspaper report which said that, maybe they have got it wrong.
So there might be some confusion in understanding or something like that.
Okay, all right. Thank you.
Thank you, sir. We take the next question from the line of Nikhil Abhyankar from ICICI Securities. Please go ahead.
Thank you, sir. Thanks for the follow-up. Just one question. So the prices for that we get for the MISP are fixed at once we win the order. So who takes the pricing risk for the smart meters? Do we take it or does the platform take it?
We will take that.
We will take it. So, okay. So if in case we are not able to supply or any case there are delays, so whatever the cost escalations, we won't get any price hikes for it, right?
No.
Okay.
But if it will be through the utility only, if there will be any mistake of utility, then it will be passed to us.
I'm sorry, sir. Can you repeat that?
If anything platform will get you from utility because of their delays, it will be passed to us.
Okay. Understood. Okay, sir. That's it. Thank you.
Thank you, sir. The next question is from the line of Mr. Rahul Kothari from Grit Equities. Please go ahead.
Sir, now that a good amount of tenders are in the market, so do we see there is any change in the pricing at the MISP level or on the smart meter level, since it's more of large volume orders are being discussed compared to 6 months before that was explained?
Nothing much. It is almost in the same range.
Okay. And sir, secondly, now that it's almost a quarter and we have secured the orders, how is the ground execution front with regards to the team bandwidth and execution level with the on the ground front? Are we facing how at the organization level? How are we gearing for it?
So we knew this 12 months back what we are entering into. This was not something absolutely alien to us because in the past also we have done turnkey projects in large numbers. So we have been building our capability significantly to make sure that all these projects are executed well within time. And I'm very confident that yes, we will be able to execute these projects well within time.
And sir, one more thing with regards to the technology front. One is meter and another is the communication technology. So is it our own built technology or we have some kind of joint venture with some technology service provider?
So we don't have any kind of joint venture. Most of the technologies are in-house. And then they are telecom is of course Reliance and Reliance Jio and Airtel are the two largest telecom players in the country, and they are some very good software vendors in the country. We work with TCS also very closely. So we have our vendor base. Then a lot of things we do in-house.
Okay, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to Kailash sir for closing comments.
Thank you everyone for joining this call. As we continue to strengthen our position in the smart metering industry, we are grateful for the hard work and dedication of our team members who have made this achievement possible. We remain committed to our core values of innovation, sustainability and customer satisfaction, and we are excited about the opportunities and challenges that lie ahead. In case of any further queries, please contact SGA, our relationship advisors. I wish you all a very, very happy Republic and a happy, prosperous New Year. Thank you.
Wishing everyone a very happy Diwali. Thank you, everyone. Thank you.
Thanks.
Thank you, sir. On behalf of Genus Power Infrastructures Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.